Hello, everyone. Welcome. It's time for Catalog and Cocktails. It's our weekly live hangout and podcast. It's an honest, no BS, non-salesy conversation about enterprise data management with tasty beverages in hand. I'm Tim Gasper, longtime data nerd and product manager at data.world, and joined by Juan.
I'm Juan Sequeda. I'm the principal scientist here at data.world, and always, as I say, happy to take a break in the middle of the week and spend time with my partner in crime, Tim, to chat about just data. And also today is a conversation, not just data, but it's also insurance and data. And I'm really excited to have our guest today, John Looker, who has been in this insurance industry and data for a long time. John, great to have you here today. How are you doing?
Good, Juan. Thanks. Hi, Tim. How are you?
Yeah, glad to have you. We're excited to chat about data and chat about insurance, and we're excited to have your expertise here.
Yeah, well, thanks for having me.
As a quick reminder for all our podcast listeners, we record Catalog and Cocktails live every Wednesday at 4 p.m. Central, and everyone's invited. We stop the recording at 4:30, and we start the after party and discussions with all the attendees who are here live. And you can also join our Slack community at slack.data.world, so we can continue having the conversations. We have a Catalog and Cocktails channel there. So before we kick off, what are we all drinking? What's everybody drinking? John, I hear that you having something very tasty today, huh?
Yeah, well, I have to drive. I have to drive right after this. So in the spirit of that, I'm drinking a Diet Mountain Dew. Otherwise, I would have had a Guinness.
I used to drink so much Diet Mountain Dew. That was like my go-to. And at some point, I switched to Topo. Now, Topo is my go-to. So I don't know. Healthier, I guess? I don't know. I have no idea. I kind of miss the flavor, though.
I think anything's healthier than Diet Mountain Dew.
What are you drinking, Tim?
I am drinking a Boulevardier. So went a little bit fancier today. And yeah, it's tasty. I like a little bit of Campari.
Well, I'm just having a bourbon and some ginger beer. I'd like that. Just nice and simple. So what are we, guys? Let's toast for something. John, what do you want to toast for?
Well, I love to travel, and obviously I haven't been. None of us have been able. So I'm toasting for a return to being able to travel at some point in the hopefully not too distant future.
I'm with you on that one. How about you, Tim?
I'll toast to the nice weather in Austin today. It is beautiful outside, so I'm glad that we can have such nice weather in February.
That is very, very true, and I'm hoping that we'll keep that weather for a while. I'm toasting that my some family they've come here to visit. My sister-in-law is here with a baby that they've had like 8 months ago, and we've been seeing pictures and videos, right? And they finally kind of made the trip over here, and they're gonna be here for a while. So we're excited about that. Anyways, Great. Cheers, everybody. Great to have you here.
That's awesome. Cheers.
So we got always we're being told to ask some funny question to kick off, and we had to ask this one, right? So what's your favorite insurance commercial? State Farm, Progressive, Liberty, Allstate. John, you've seen all of them, you know them all, everything. What is it? What's your favorite one?
Well, there's an awful lot of them to choose from, but lately I've been kind of intrigued by the emu that goes over and sits on the volleyball in the beach volleyball game, and I was wondering how in the world do they teach the emu how to do that?
There's also one, I'm with you with that. I love that, and especially because how do they get that into the car, right? There's that commercial they have it in the car.
Yeah,
they have it like that. I think that's my favorite one because
very cooperative emu.
That's amazing. It's got to be computer animated or something like that, right? It can't be what we think it is.
You would think so.
Anyways, well, post in the chat. Tell us where you're coming from. What are you drinking? What are you toasting for? And what's your favorite insurance commercial? And with that, let's kick up with some insurance stuff. And I mean, John, can you just to kick off, give us a little bit of intro because you've been in this space for so long. I know you were in Deloitte for a while, you retired, but you want to keep working. So give us a little bit of background, and I love if you can kick us off with one of your favorite horror stories about data and insurance.
Sure. So yeah, just a little about myself. So I've worked at 2 universities. I was the CIO of a liberal arts college for a number of years. I worked at 2 banks. I ran systems development for a couple of banks in different functional areas. Then I moved into the insurance space. I worked at Aetna, Cigna, and then I moved to Deloitte. And I was a partner at Deloitte. I was there 20 years, and I was one of the founders and the leader of Deloitte's insurance analytics practice for a really long time. And in that time, I helped my colleagues and I, we innovated and invented a number of patents and pending patents related to predictive modeling, advanced analytics in the insurance space. And then I did retire a year ago from Deloitte early. Wanted to do some different things, and now I am I and a couple of partners. We've moved into a small privately owned insurance company that we hope to grow to a public company someday. And we're expanding it from a monoline single product company into a multi-line commercial company. And I'm the executive vice president and chief strategy and analytics officer of that company. It's called Universal Fire and Casualty Insurance Company, based in Michigan.
Yeah. So with that, I mean, you have decades of experience, and insurance is such an interesting space because data is a core part of everything that they do. And everybody in the world basically gets affected somehow by insurance. I'm sure you have many horror stories, so please kick us off.
Yeah. So
build off from there.
So obviously, doing predictive analytics for 2 decades at a place like Deloitte, we see a lot of companies, and I've walked the halls probably at 80 plus insurers. But my real digging in on this topic and understanding the problems with data governance, and I'll talk about that later, really started as a little bit of a hobby interest. And what it was back, I don't know, 10 years ago or so, I started noticing that I was getting like a zillion credit card applications in the mail. I would, think about what's inside my wallet. Inside my wallet, at that time, I think I actually got a new credit card recently, but at that time I had like a Discover card since like I graduated grad school in 1986. I had a Visa card, I think I had since like 1999. And then I think I had my corporate credit card, which everybody had to carry. And that was it. So I hadn't gotten a credit card like over 20 years. But yet these companies felt like somehow I had this, dying interest to get more credit cards. So I started saving these envelopes that kept showing up in the mail. And I literally, after telling my wife a couple of times, no, I'm not going to throw them away, I filled up a box with I think there were about 720 credit card applications over a 3-year period. So I was crazy enough to save these for 3 years. So
yeah, that is crazy.
That's a lot of marketing dollars
great.
going to try to get your business there.
Well, yeah, think about how much each of those envelopes costs in a fully loaded sense between corporate overhead and employees and et cetera. But so what I did was I took all these envelopes and I sorted them by where they came from. And I laid them out on my driveway and it turned into a 16 by 20 grid. And I took a photo of it from an upper floor. And I started using that photograph as a prop for my discussions with clients when I was at Deloitte about data governance, and why the heck do you keep sending me all these offers when there's nothing in my data could indicate that I have a propensity to get a new credit card.
That's fascinating.
I turned to a lot of discussion.
You got to share a picture of this somewhere.
I still have it. But actually, if we can show it here on the slide, can you see that? Those are envelopes on my driveway from an upper window, 16 feet by 20 feet across. So I started having conversations with companies about this, and what I heard repeatedly was, we buy the data from these vendors, these external data brokers, and they evaluate and they have models that determine a person's propensity for having an interest in a new credit card application. And then shortly after this happened, there was one major credit vendor, who shall remain nameless for this public event, who made a service available where you could pull up your own personal marketing data record. So I pulled up mine and I was horrified. I was horrified how incredibly inaccurate it was. And the reason I was horrified, first of all, that my data was so wrong, but the other thing that I thought was interesting was, as you can tell from my appearance, I'm not a newbie in the business world or in the consumer world. I'm not that old, but I'm also not that young. But I've been married for a long time. I have a couple of older children. I've lived in the same town for a long time. I should be like a no-brainer to have accurate data about, because I haven't been moving around. I'm not hard to track down. I'm pretty stable. And I was like 30% correct. And I'll tell you.
So why is that? Why is that?
Well, I traced it, and then I'll get to kind of what I did after that. But I traced it, and this is the reason. The reason is, prior to my two parents getting ill and passing, I don't know, 15 years ago now, they needed help doing the paperwork to pay their bills. So they had all their bills forwarded to me. And apparently what that does in the big data consumer marketing data ecosystem is that my dad, who was an elderly man, veteran, smoker, lots of different consumer behaviors, he became the head of my household in the data. And he used to get new credit cards all the time. I don't know why, but he did. And the reason I know this is because I kept getting different envelopes showing up in the mail all the time with his bills in it. And then I asked him, what happened to this one? Oh, I canceled that. I got this one because they sent me this offer or that offer. So that was it. So just the mere fact of an older male sending his mail to my house with the same last name, somehow he became the head of my household. And that created this cascading array of errors. And it caused this cascading array of crazy offers and other behaviors that I've literally, to this day, I still get crazy stuff in my mail because of him.
That's crazy. I mean, yeah. and this data is so important to the lifeblood of insurance companies, right? Or financial companies more generally,
everything.
Right?
Yeah.
Everybody is trying to send offers, trying to convert. I mean, this is a huge channel, right?
I mean, in this case, they're just doing marketing to you. But I mean, what about with that inaccurate data? They're trying to make decisions about you, right? They think that you're a smoker when you're not a smoker, and you think you're 80. Like, how is that going to affect?
So I might not get an offer for life insurance, or whatever,
Yeah, and then you have to go spend time trying to say that's not true, and that's just more time and money wasted to go kind of correct some stuff that they.
Yeah, how do they know what products to recommend to you then, right?
Yeah, I mean, people like me get lost, but I think the interest, what's particularly interesting about this is what happened next, which was I kind of said, well, if they're letting me look at my data, they'll let anybody look at my data and look at their data. So I rounded up a couple of hundred of my Deloitte colleagues and said, I created this kind of anonymous, survey and categorized it by the different data fields that you were able to see. And I asked a couple of hundred of my Deloitte colleagues to go out and look at their data and fill in the questionnaire. And I aggregated the data, and I ended up writing a paper called Predictably Inaccurate, which I think I've shared with you guys, but any of you listening are happy, you can just go out and type Predictably Inaccurate, and you could either type my last name, Lucker, or you can type Deloitte, and you'll pull it up. And what we found on a high level was 2/3 of the people that evaluated their own data found that their data was somewhere between 0 and 50% accurate. So even the high watermark makes their data barely a coin toss, in which case, why buy any data at all? You just toss a coin. Just, is this person this, toss a coin. Is this person to that, toss a coin. 1/3 of the people, they were 0 to 25% accurate. So they were, and I was barely above that high watermark. 59% of people said their basic demographic data was correct. So we're talking gender, age, pretty simple stuff. 44% of people said their vehicle information, so auto, so that's obviously important for things like auto insurance, or for that matter, just car companies trying to market stuff to you. 44% of people said their vehicle information was 100% wrong. 75% of the people said their vehicle info was 0 to half correct. 41% of people said their home data was 0 to half correct. 42% said that the data was accurate about things they buy. And that's probably the best sound bites. So the message here is that this data is horribly wrong. We then asked people their propensity to fix it. And very, very few people had any interest whatsoever in taking time out of their
in this case,
day.
you mean like us, the consumers, going in and telling people to go fix it, or
This particular service asked you if you wanted to fix anything. And what we found, there were two categories of people. There were very few people who chose to fix it. There were a number of people who did. There were very few people who chose to fix it. Most people chose not to fix it, and a few people did fix it. They deliberately made it wrong because they just wanted to be left alone, and they figured, I'm going to mess them up.
So, okay, so this is, how do we address, I mean, this is, I guess the overarching challenge here is just having inaccurate data. And this is just because of people merging data incorrectly, because they don't know what things mean. Like the example you're saying that your father is now the household of your household, when that's not true. What can we do? Or is this just like a fact of life? You know what? We're just always going to have to live with crappy data. And we always talk about the garbage in, the garbage out. And you know what? Just throw the towel in. It's always going to be bad.
Yeah,
always have garbage data. I mean,
is this the best data available, right?
Well, I mean, again, I'm not going to say who it was, but it was a major name brand data vendor. So, I think what makes this difficult to come up with a solution for, and we'll talk later about things you can do about it from a data science and data governance perspective. But the issue here is that you have to keep in mind that all these different companies, the big name brands and the lesser brands, they're not the originators of all this data. So, company X may sell 3,000 fields of information. They're not generating those 3,000 fields. They might only generate 200 of those fields. And then they license that data from all these other vendors who specialize in, there's a company that sells vehicle data. There's a company that sells home data. There's a company that sells purchase data. And they license it, and everybody's cross-licensing and cross-selling, and royalties are flying all over the place. And that's the problem, is that there is no readily understandable ecosystem map of this type of information. And it's very difficult to trace this field about me is this primary data? Is it secondary data, tertiary data, quaternary data? Where the heck does this data come from? And the issue, if you were to go back to company X that sold you this data and say all this stuff is wrong, like this one company where they gave you an opportunity to fix it, that's all well and good. But if that's secondary, tertiary, quaternary data, they don't really have a ready mechanism to flow that back to where it came from, because they may not technically even know where it came from.
Yeah. So it seems that kind of the assumption is that there's only one big blob of data that we should that we have, when in reality it's a mix of a lot of stuff, and we should really figure out how to focus on smaller granular pieces of data. I can say, look, here's my whole view of it, but in reality, here's a small slice of it, and this slice is actually 100%. It's really small of it, but it's 100%. This one is 50%, and you can actually give the lineage, the governance of where that data comes from. And so instead of just giving one entire view of the data, right? We always talk about the customer 360 or whatever. It's like, let's be honest, you want the customer 0 degrees to 10 degrees, and then that's 100% accurate. The 10 to 25 degrees is going to be something else. And
right.
I mean, this is actually a good insight. I'm thinking about
this is obviously very germane to what data.world does. This is right in your wheelhouse. So I'm talking about external vendor information. The same issues can take place inside of big legacy corporations. I mean, I as a consultant, I worked with many dozens of large, medium, and small insurers, and now as a insurance executive, I'm very, very focused on, where do I get this data? How do we gather the data that we need internally? How do I know it's accurate? I mean, the objective as the chief strategy officer of this company that I'm helping to lead now, I've been very focused on going out to external vendors. We want to pre-fill information as much as possible. We want our agents and brokers to do as little data entry as possible. We want to be able to validate the information that is provided to us, because not surprisingly, very often the information provided to you is either innocently or potentially deliberately wrong, and you want to be able to validate it as best you can. So I've been having discussions with these vendor partners, trying to understand What are you selling? How do I know it's right? How can I validate it? Things like that. Where do you get it from? It's a hard thing to get answers to because a lot of the times they just say that's proprietary.
So let's talk about validation for a second. And this is a good timing. We have a chat message here in the chat from Mike Terry. He says, and with tertiary data, you end up thinking you double checked it against another source. So you've actually just paid twice for the same data. So it's like, yeah, it matches. It's good. In reality, you just matched it. You just matched your garbage with some other garbage. And by the way, you paid twice for the garbage. Right?
Potentially. And let me be a little more precise in how I define tertiary. So there's one way to define it the way if I understand Mike's question, but the other way to think about it is I buy data from company X. They're not the originators of that. They get it from company Y, but company Y has taken company Z and company A's data and mushed it together, mashed it up in some way with some algorithm, and they've turned it into the field that actually flowed through to me. You see what I mean? So yeah. there's in that case, there are two tertiary sources for that information that get blended into the secondary provider, which flows to the primary provider. So it's a very messy problem.
So what should insurance companies be doing? And then I guess this translates to other just general companies. Let's kind of talk opportunities here.
Well, I think they have to be very, very careful about what they do with this information and how they use it to make decisions. And I'll give you an example that's in the news as we speak. Consumer Reports came out with a study. Actually, it hasn't even hit my mailbox yet because I do subscribe. I went back and looked for it, but maybe it's in the March issue. But there was a bunch of news about there are certain personal auto companies that are using, in certain states, they're using education and job title as variables in some form or fashion to price your insurance. And in the study that was quoted in the Consumer Reports, they talk about that certain protected groups pay more because they have lower educational levels. So I was just curious. So I went out and pulled. I still have the data that I pulled from this data source that's like from 2016, because they don't offer that service anymore for some reason. And went back and looked at my own data, and I was pleased to see that I had a high school diploma. They don't know anything about my master's degree. So how would I get scored in that regard? They're missing 2 degrees from me. That gives you an example of the problem you have. So as an insurer, these companies that are cited in this research study are using educational level as an indicator of how I might be posing risk to, based on their correlations. And my data is wrong, as I said earlier. They also have my job. It's just a vague job title. They have me as like managerial, whatever that means. That could mean a lot of things. I could be a manager of a Burger King, or I could be the, executive at a corporation. So my point being is that there's correlation. It's difficult to describe causality. I think you could probably make some points about, why the causality might exist, but it would be speculative at best. But the big issue is that based on the law of large numbers, the data is predictive. That variable is as a single variable is predictive. But now we get into the mischief of insurance, which is, while it's macro predictive, it's on a micro level quite wrong. So the micro segmentation is jeopardized by that. And that creates the insurance problem, is how, while I might make macro level decisions, and again, actuaries work in pricing and insurance is all predicated on the law of large numbers. It works at the law of large numbers level, but it's not going to work on the individual level, because for every one you find that it works for, there'll be another one that you find it doesn't work for.
Yeah.
And that's what regulators are starting to wake up and pay a lot of attention to. And I'm keenly plugged into this because I've actually been providing advice to several insurance regulators who have called me. And it's not usually one of those calls that you say, no, I don't want to help. Because you kind of, especially in my role in the industry, it's important to be, helpful whenever possible. And I've talked I was on an advisory board for one state, and we talked a lot about this issue. And the regulators at there's an organization called the National Association of Insurance Commissioners, the NAIC, and it is essentially a organization of the 50 state regulators. And I think there's actually 52 because I think Puerto Rico's got one, and I think maybe Guam too. And actually, maybe even 53. Washington, D.C. has one, I think. But anyway, and they all get together and they talk about, how to harmonize certain aspects of the insurance regulatory process for the country. And this is an issue that's on their agenda: is data governance, algorithmic risk, and their big concern is how do these issues create what's called disparate impact, which is how do they adversely impact protected groups, whether they be ethnic or racial groups or various other protected groups, in ways that are inherently unfair, even if the industry didn't intend anything to be unfair, because they are either data artifacts or statistical artifacts that create that what's called disparate impact. And that's the issue that's swirling around right now.
I think this is fascinating. And, I think what's interesting is that obviously with this crew here, people listening and live on the show today, we've got a little bit of a niche audience here. And I think to a lot of us, some of these things are kind of common sense, or, at least, make a lot of sense, right? What's the biggest gap that's preventing insurance companies from being able to, or any companies really, to be able to take these things into account? Is it a skills gap? Is it a technology gap? Is it a policy gap? Or like, does the government need to kind of come down and say, hey, like, y'all need to kind of change your approach here? What do you, is it a mix? What do you see there?
Well, I think it's a mix. I think it would be very helpful to have the regulators get much more vigorous and rigorous with the data broker ecosystem. I think the message that needs to be sent to the vendors is basically, if you want to be a participant in the industry in which we regulate, there are some rules of the road and certain expectations and certain transparency that is expected of you. Otherwise, we'll see what's next. Mm-hmm. And I don't think you want to get to the what's next. And I think the same goes for insurance companies as buyers of this information. There is power in numbers. I think all these insurance companies, my company included, are members of major trade groups. We're a member of an organization called the APCIA, American Property Casualty Insurance Association. There's another major group called NAMIC, National Association of Mutual Insurance Carriers. That's on the P&C side. The life insurance side has similar organizations. I think they need to basically, I think there's an opportunity for those organizations and the member companies to make statements to the data vendor ecosystem, to say, we need to talk about how to improve this, how to create more transparency and improve quality, and at least help us as insurers understand what the issues are and how do we navigate around them. Because I'm not suggesting the data is ever going to be perfect. Mm-hmm. But there's questions. I'll give you some examples. It's like, so I used to live in the state of Connecticut. I live in Florida now. In Connecticut, to the best of my knowledge, if you own a dog, everybody has to buy a dog license from their town clerk. There's 169 towns in Connecticut, so there's 169 little micro repositories of dog ownership. That is the definitive source, the most accurate source of who owns a dog, assuming people are being legal and registering their dog. Petco, as an example, is probably not the best place to decide if somebody has a dog. It is unclear how these vendors get dog ownership. But I've had a dog until recently for 30 years. According to my data, I didn't have a dog, but I registered our dog with a licensure. So the point being is, where are these vendors getting this stuff? And are they getting it from the appropriate primary data source? Or are they getting it from what is cheapest or most expedient, or the one that can create the easiest data feed?
Yeah, it seems like sometimes it's more based on, the data that's available or the vendors that are available, versus there's almost this art of data sourcing that, exactly, is kind of missing from all of this. And
but then that means that as the buyers of this data, we really need to be specific and say, I want to know where your data comes from, and we need to go push for that, right? People can give you some answers, but I truly want to know the provenance of that, of where you're coming in.
But then we get to the side of the equation that data.world lives on, and that is the data governance side, and the schemas and the like. And so as this data flows into the company, how does the company keep track of this? So I mean, it is not unusual for you to go into a large insurance company and find that they buy the same data a bunch of different times from either the same vendors or many vendors, and that all flows around inside the organization based on somebody's personal preference or based on legacy history. There's a lot of reasons why that is, and what you end up with is this giant data governance rat's nest inside of every company, and this becomes a big issue with regards to what's the accuracy of the data as it blends in with internal information? What's the context of this information? Are we even using the right data for the right things? How complete is it? Because a lot of times, there's fields that are empty or they're not appropriately populated. Is the data consistent in some form or fashion? The biggest one for me is timeliness. It's so if I'm making a decision about something or some risk aspect of an insurance problem, how accurate is this data with regard to currency? Is it a year old? Is it a month old? Is it 5 years old?
I mean, there's almost like a checklist and a quality approach that we should really be thinking about here. That's really important. And and I'm just noticing that we're running low on time here. So I think before we fully wrap up, want to ask you one more quick question, really quick, John.
Sure.
When you look at some of the new players in the space, like the Zebra and Lemonade and things like that, do you see that they're doing a better job of handling this data sort of messiness problem, or what's your take on some of the newcomers?
Well, I would say they have the same. They're beholden to the same supply chain of data, and if they create easy mechanisms for a customer to enter data to them, that's nice. But those of the insurance industry know that data has to be validated, because if a particular answer is going to advantage you price-wise, that needs to be checked. So I don't see that. I certainly don't see it in the financial results of some of those companies that you named. Not by any stretch of the imagination, not yet. So no, I don't. I think they've got the same problems as everybody else, whether they're quote unquote insure tech or legacy insurers. They've all got the same problems in my mind.
Maybe they benefit from being able to start fresher with their tech stack, but otherwise, in the end, the lineage goes back to the same data vendors, right?
Correct. Yeah. Hey, so John, I told you 30 minutes fly by. I mean,
it did. I've got all these other cool things to talk about.
Well, we'll do that. So that's just for folks who are just listening to the podcast. If you stick around, we're going to stop recording and we're just going to keep having this conversation. So feel free to join us next time. We always love to wrap up with some takeaways. Tim, what are your takeaways after this discussion?
So obviously a big takeaway for me, based on your really great inputs, John, is this whole garbage in, garbage out kind of situation, right? Like, when you said that 44% of people said their vehicle information was 100% wrong, and a third or however many folks with their data that say it was 0 to 25% accurate. I mean, that's just crazy, right? It just goes back to the whole point that we really need to make sure that we're getting good data in and making, and to your point, right, making good decisions about sort of what is my confidence level around this data, right? And if I'm not that confident in this data, then that affects the kinds of decisions I can make using it.
Yeah. And so my takeaway, I got two. One is I love this whole macro predictive, right? It works under the law of large numbers, but at a micro level, it doesn't. And if it works for one, you're going to find another person similar that it doesn't work for them. I think that's something really crucial to take into account. And the other one is we talk about data quality. I think there's this new buzzword of data observability, but in reality, maybe it's another one. It's the next buzzword, data validation, data validity. So I think that's another key takeaway. John, to wrap up, two quick questions. One is, we got a broad audience. What's your advice for folks who are listening to us? One. And second is, who should we invite next to be on Cataloging Cocktails?
Well, what's my advice? Well, you heard, first of all, look for ways to check your own data. That would be my advice, because I think it's an important exercise. So there, you reach out to some of these companies. They usually have ways to examine. Any of you who are California residents, raise your hands, but you can't do that here. Anyone who's a California resident under the California, the Consumer
CCPA.
Protection Act, the CCPA, has the right to ask to see your data. So do it. Take a look, and shoot me an email and let me know what you find. That'd be kind of interesting. As far as who you'd invite, I would recommend inviting an executive from a data vendor.
We'll do that.
I can help you find one.
Excellent.
There's some out there I know.
John, thank you so much for your time. We appreciate it. Cheers, my friend.
My pleasure.
Juan and
Cheers.
Tim. Have a great one.
Cheers.